I do think that, again, we're continuing to see rising inflation, no matter what the Federal Reserve tells us about inflation. We just got more proof of that with the PCE on Friday, and it's very interesting. We're taking in 3% more, 0.3%, and we're laying out 0.8%. Well, to me, that sounds like how long until you go broke when you live at that thing. So I think that will continue to help gold and silver rise. And I think that, we have a very good shot at seeing, 2,500 this year. I would expect to see silver get into the 30s, maybe the mid 30s before year's end.
Todd Bubba Horwitz, a seasoned financial strategist and the founder of Bubba Trading, projects a bullish outlook for gold. He predicts that the precious metal could potentially reach $2,400 to $2,500 per ounce by the end of the year. While acknowledging the possibility of short-term pullbacks, Horwitz remains optimistic about the long-term prospects for gold. Bank of America also expresses a bullish sentiment towards gold, with commodity analysts, led by Michael Widmer, reiterating their call for gold prices to rise to $2,400 an ounce this year. This optimism is fueled by gold's recent gains, which have seen the metal establish record highs. The bank's conviction in gold's performance only strengthened as the year progressed. Despite the bullish outlook for gold, Horwitz notes that silver, while also possessing potential, has recently been range-bound. The price of silver surged to its highest level since March 2022, following solid growth in private sector employment during March. This increase was driven by a dampened outlook for summer rate cuts and increased demand for safe haven assets. Contrary to some Federal Reserve statements about inflation, Horwitz believes that inflation is rising, as recent data indicates. He suggests that this rising inflation will continue to support gold and silver prices. In separate remarks to CNBC, Atlanta Fed President Raphael Bostic indicated that rate reductions should likely only occur in the year's fourth quarter. Bostic anticipates only 1/4 percentage point cut in 2024, a forecast significantly lower than the expectations of many of his colleagues. Come along as we explore the valuable insights Todd Bubba Horwitz provided. Don't miss out on our latest updates. Subscribe to our channel and activate notifications. Thank you for tuning in.
I do think that, again, we're continuing to see rising inflation, no matter what the Federal Reserve tells us about inflation. We just got more proof of that with the PCE on Friday, and it's very interesting. We're taking in 3% more, 0.3%, and we're laying out 0.8%. Well, to me, that sounds like how long until you go broke when you live at that thing. So I think that will continue to help gold and silver rise. And I think that, we have a very good shot at seeing, 2,500 this year. I think that you're going to see it, probably sometime through the year. It's hard to say when. I mean, there's a greater probability of a pullback in the next couple of days or weeks because, again, you cannot go straight up in markets without some sort of pullback, because if they go straight up, that means that they're not healthy, and that means there's a bigger sell-off coming. So I'd like to see a pullback. Actually, even the 2,200 would be great, but certainly we could consolidate here and move our way higher. But I would think probably sometime, August, September, we could see that 2,500. Really, to understand what the United States government is doing is almost an impossibility because, of course, they continue to spend money that they don't have. The Fed continues to create money that we don't have. And, of course, your deficit continues to rise. If you and I lived like governments live, we'd be either in bankruptcy court or jail because, again, you cannot keep spending. And their lack or the refusal to put in a real budget and actually watch the dollars and really do something is creating this problem. So I think they are buying the metals to put themselves in a position, because I do think that we do have a financial calamity going on here. And of course, I think one of the reasons that the Fed may still be insisting that they're going to cut rates is because they see something that has not really hit the street yet, which is a much bigger problem. I think the banks have a very dramatic problem. I think the banks are very much over leveraged as they were in '08. And again, remember that market collapses don't just show up in one day. There's a lot of information that comes out long before, and there's been a lot of things that just don't make logical sense in the overall markets right now. It seems like they're trying to control things. And of course, it is an election year as well, which creates another problem. I would expect to see silver get into the 30s, maybe the mid 30s before year's end. I think it's a great thing to own. And again, I warn everybody that you should have some representation of physical metals, because there's an outside chance at some point you may need these as a currency again. And, you can't be taking gold bars out there because they're not going to give you change for it. So you're going to have some silver on hand as well in case we need to use it as a currency. I definitely think they should pick up the actual gold. I think, listen, we can't account for exactly what's going to happen, right? We cannot predict the future. But certainly, if you look at what is going on in the United States of America with the massive amount of illegal immigration, the massive costs, the things that are going on here, there is a lot of fear, and there is certainly a very real potential of another revolutionary war at some point. And I think this election will go a long way telling us where we're going. And I think that people are picking it up for those particular reasons. And I think it makes sense. When you look at it from a logic standpoint, it's a great investment, has been over history, which is why I always recommend to have about 10% of your net worth at least in gold or silver, or gold and silver, your choice. But again, it's always grown. It's a strong asset. It is something that you can own, touch, feel, and use if needed. And I think that is really where you need to be. And I think that's what some are starting to realize, is that those are very important assets to have in hand, because if the paper asset markets blow up, which again they will at some point, as they've always done, having good physical metals in your pocket is a pretty good place to be.
Markets are widely anticipating the Federal Open Market Committee to initiate policy easing this year. However, there has been a need to adjust expectations regarding the timing and magnitude of cuts due to persistent inflationary pressures. Despite this, other economic indicators, particularly in the labor market and consumer spending, have remained resilient, allowing the Fed to assess the current financial landscape before taking action. Todd Bubba Horwitz suggests that implementing a rate cut could exacerbate existing inflation and debt challenges rather than yield positive outcomes. Federal Reserve Chair Jerome Powell also weighed in on inflation, cautioning that it is premature to determine whether recent inflation readings signify more than a temporary uptick. Powell stressed the importance of allowing incoming data to inform policy decisions, given the economy's strength and progress made on inflation thus far. Horwitz further critiques the Federal Reserve's management of the economy, labeling it a scam and pointing out historical instances of central banks devaluing currency. Let's get back to the interview.
First of all, I'm always questioning. Now, the data that came out this morning, ISM, that's a private number, so I'm a believer in that number, okay? But, government numbers, if you go back and look back at jobs, for example, 11 out of the last 13 jobs have been revised lower. The Americans have got 1 million less jobs than illegals have gotten over the last 3 years since Biden has been in office. So I think that the jobs market is weak. I think that the economy is weak. I think that every sign we look at, other than the stock market that continues to rally, says that there's a lot of issues here. And of course, that will help propel the price of gold and other precious metals higher, because of course that is a safety asset, it is an inflation fighter, and I do believe that will help. But at the end of the day, I think we have a very, very weak economy, and we are just on the edge of being pushed over to a major disaster. I think gold listen, markets are pretty efficient these days. Everybody kind of knows what's going to happen. So gold knows that there's going to be a potential rate cut. Now, again, I don't see a rate cut, just to be clear. The only reason they would potentially cut, which would be August or September, would be because it's a political move for the election. But if you looked at the real situation, if you look at the numbers, if you look at the raw data, forget about its election year, forget about anything else, the economy is still too hot because there's still too much flowing through. So at the end of the day, you cannot cut rates into an economy that is already overheated and expect to have good results. And all that's going to do is create more debt for more people and really put everybody in a major jam and a major problems with their own finances. I'd be very shocked if the 10-year notes weren't at 6% by the end of this year. I'd be very shocked if the Fed does cut rates. But again, this is a political move. Remember, even though the Fed is supposed to be a private corporation, they still are influenced, and they could influence the election and the results of that election by some of the moves that they make. So I think they've done listen, I think the Fed does a horrible job anyways. The whole scam behind the Federal Reserve and the way they've done it, I mean, the central banks have been stealing since the 1600s in England. And they've been devaluing currency since then, which is why the fiat currency system is nothing but a Ponzi scheme anyways, because there's no underlying assets to any of them except for the Swiss franc. You have banks that are well over leveraged. When COVID hit, they lifted the restrictions of what the banks could lend, and then they went back to the 10 for 1. But of course, there's a lot of accounting abnormalities that they are allowed to do, like borrowing from the Fed funds and turning that into an asset from a liability, which again creates more new money. We've never been in a position like this before where more individuals have at least one credit card at limit that they're paying the minimum on. You can never get out of debt that way. You've got housing, although still strong, but slowing. And you've got housing builders now making deals on mortgage rates, giving cheaper rates. So you have a system that is well over leveraged once again. And of course, eventually, when it starts to fall apart, the over leverage really starts to come and play havoc on the investor, on the banks, and on the economy.
Peter Schiff, a well-known critic of cryptocurrencies, took to Twitter to declare silver as Bitcoin 2.0 amidst its significant price surge. He highlighted that silver experienced a notable 6% jump earlier in the day, contrasting with Bitcoin's decline under financial strain, despite recently surpassing silver's market capitalization. With both gold and silver experiencing significant price movements, what factors drive these shifts in the precious metals market? Share your thoughts in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.